So you need some help figuring out how to come up with the best rental property write-offs or tax deductions? Well, in this video, I'm going to share 10 top tips with you coming up. Hey there, it's Billy with Keep on Cash Flow, helping you to grow your money and your mindset so that you can get to the lifestyle that you really want to lead faster. Now, on this channel, we're going to be sharing weekly tips and strategy videos just like this. So if it's your first time here, you're going to want to consider subscribing to the channel. And you'll also want to make sure that you check out the links and the comments that are in the section below, because week after week, there's wonderful, wonderful comments. But as for today, I want to get back to this whole topic of sharing with you different deductions or write-offs that you can have for your rental properties. And the thing is, I wish someone would have shared these things with me in the very beginning, because it would have helped me to decide to actually start investing in real estate probably a lot faster. The same information for you may lead you to a different decision. But you know, when you think about taxes, a lot of times people don't necessarily like them. And I always remember one of the Rich Dad advisors, Tom Wheelwright, he talked about the tax code is actually helps to spur on entrepreneurs so that they can do what is being asked by the local governments. And so as a result of that, I think it's important to make sure that you are working with a very competent tax professional that can help you to understand that tax code and be able to use that to your advantage and help to spur on your different investments. So let's talk about the 10 different write-offs that can help you. And to do that, I actually came up with a little list just to make sure that I don't forget anything to share with you. And before I go into this list, just one last thing. The things that I'm going to share with you are things that actually we're doing or I'm doing with my company. So I want to make sure that you go out and reach and speak to your tax professional to make sure that they can advise you on how these things will work best. So once again, just wanted to share some experience with you. So as a long distance investor, I want to talk to you about the first different types of write-offs or deductions that you can have as a real estate investor. And the first comes in travel, but I'm actually going to break this into two different types of travel. As a long distance investor, one of the things that's really important for me to do as I live in Europe and need to fly back to the US to the different markets where our rental properties are, we have different types of travel that are types of deductions. So those, the flights, and then once we're there with our teams to make sure that the different meals that we may be having as we discuss the business, those types of different things as a long distance investor, we can use as deductions or tax write-offs. The other thing is travel, but thinking about travel, but more on a local basis. So if you are investing in your local environment, in your local city, one of the things that you may need to do is get in your car and drive to the rental property. You may be managing the property yourself, so you have to use your car, you have to use the gas to get to the property, and those are different ways that you could look to. They're part of your business expenses, so those are something that you could use to also potentially write off. And some people like to also use their office, or specifically their home office. So let's say you're using a portion of your office, provided that it has a door and it has all of the different requirements that are needed based on the tax code. A portion of that you could also look to have potentially written off. Or if you rent an office space somewhere else and in an office building, et cetera, very similar type of thing. If you happen to have employees, you investing in the employees and the expenses that are associated with those employees are also deductible. Those areas are part of running your business, so that's something that the government would want you to do and will allow you to write off. Also talk about insurance. So whenever you have a rental property or multifamily buildings like we like to do, you need to make sure that you have insurance, and part of having insurance is also something that can be written off. And aside from insurance, there's also different things that can happen. You may have casualties, which is another item that you want to think about. Casualty losses. So if you have a fire or if you have types of floods, the money that needs to go back into those items are also, once again, or can be deductible. Once again, all these things you need to check with your tax professional, make sure that they are applicable for you and your situation. And also thinking about just repairs, the day-to-day repairs on a property are also deductible, right? So whenever you need to do something that has to be fixed on the property to keep it in good standing, whether you're fixing a door that has broken, or you have the typical something's happened with one of the toilets, when you get those fixed, those are also deductible because it's part of keeping your business up and running, and it's something that you need to be able to look into. One of the areas also is another key area for deductions or write-offs, or the legal and professional services that you may need. So one of the line items when we look at all of the legal teams, whether that's helping us in terms of bringing in or transacting a new property, bringing it into the portfolio, having to deal with things like evictions, or having to deal with any types of legal issues, those are part of doing business. And then also anyone that you would bring on to do maybe specific one-off type of jobs, those are also professional services that you're using that you could look to potentially have deductible or written off as part of doing your business. And then I'm going to leave you with the last two in terms of write-offs or deductions. And the first one is interest. So when you have the interest payments on a mortgage, for instance, that you're using, or something that a lender's giving you, those interest payments that you're using from the financing costs are also something that can be written off or deducted from your income taxes. And then lastly, and this is probably the most exciting or the best one for those of us that are in real estate, and as you're looking into real estate, is the entire depreciation and the depreciation expense that can be written off. This is one of the most powerful parts of rental real estate, is depreciation. So when you can look at these different 10 items that I've just talked to you, hopefully you get an idea as to how each of these 10 items apply in rental real estate in your multifamily buildings. For those of you who are also long distance investors, you can see some of the different areas that you'll now want to go out and talk to your tax professional about, so that they can best advise you on claiming the most appropriate write-offs and or deductions. So I always love to leave you with the question of the day. And so today's question of the day is, of these different deductions that I just talked to you about, which was the newest one that you hadn't thought of, or that you didn't know about, or your tax professional had not spoken to you about? I'd love for you to leave the comments in the section below, or if you even have other questions, feel free to leave those, and I'll be looking forward to answering your questions and reading the comments. So as always, this is Billy Keels with Keep on Cash Flow. That's my 2 cents for today. And as always, hasta la próxima.